Hello, everybody. Welcome to the Digits webinar. We are here today to talk about Target. Target's been in the news lately. I'm sure most of you on the call are very familiar with the Target world and are up to speed on it. Welcome today. I'll go through a few logistics kind of here in the beginning, and then we'll welcome in our panelists. Um, thanks for joining. For those of you who are unfamiliar with Digits or new to kind of seeing us today, and from the attendee list, it looks like a lot of you are sort of new to our world. We are a leading independent retail media agency. We're based here in Minneapolis. We were founded in 2016. Retail media, sort of how we define that, is on-site paid search, Target Circle, coupons, digital shelf, Roundel, all of those touch points in the Target world. We do have Target as our flagship from a support side. We manage today over about $6 billion worth of sales going through the Target ecosystem. So we have line of sight to a lot of things showing how well things are working at Target, both within retail media, but in aggregate business. If you're interested in getting something started with us, one of the easiest, free, low-touch ways. So if you're not using Target Circle too much, you can go to our website, digitsagency.com, fill out a Target Circle market share report. We keep track of all the offers that are running. If you're interested within your business, whether it be cereal or hair care or apparel, whichever, we'll look through our data. We'll let you know kind of how people are using the Circle ecosystem in your business, kind of where you guys fit in. It's sort of an easy, free data point for you guys. So a lot of people take that as their first step working with us. So check out our website, fill out that form, and it'll come right to us. So shifting into the meaty topics for today. So today, our goal is to talk about Target. We talked a little bit Target therapy session, potentially is where it's at. So I have panelists with me today that I'm going to introduce. So, myself, Dave Glaza, CEO, founder of Digits, and then we have two sort of special guests. And so I'm going to let both Matt and Chris introduce themselves. And then also with the weather turning to some positivity, maybe in a few days, I think it's supposed to maybe hit 90 or upper 80s this weekend, is I want to know your favorite Minneapolis summertime activity. How do you enjoy the Minnesota summer? So Matt, turn it over to you first.
Well, thanks, Dave. Appreciate you having me come on here with you guys today. I think, well, first of all, I'm surprised nobody mentioned last night. Do we even want to talk about that? Are we going to skip it?
That's not a favorite summertime activity.
Yeah.
No, no.
Well, it parlays in because one of my favorite things in the summer is not having to watch much Minnesota sports. Thankfully, that's just the Twins, so less heartbreak. I'm a big golfer. I like to golf. I go to the cabin. Those are my two big summer things. Oh, an intro. Who am I? So I'm the VP of Food and Beverage at the Genesis Company. The easiest way to think of it, we're a retail broker that specializes in Target as well as a big player in e-com with Amazon. So we help brands in those two areas.
Awesome. And previous to this, you were, in a prior stop, you were with Target, correct, Matt?
I spent 5 years at Target from 2015-ish to 2020. I was a senior buyer in the deli division. So I was food and beverage. I've been in food my whole career. And I was behind the scenes at Target along with Dave. I know you were there, and many people on this call probably are ex-Target, I'm guessing.
Awesome. And I would say for those new, if you don't know Matt, find him on LinkedIn. He posts a bunch of good content and help him keep up to date on Target food and other things sort of in the space. So find him out there. That's how Matt and I got to know each other sort of within this space. Yes, there is. Sorry, as a quick question, Chris, before we steal your thunder, it is recording and it will be shared. So we actually have a Digits YouTube channel, which we have our stuff out there as people can check out on their own, or we'll send out the links after. So, Chris, I'll turn it over to you now.
Yeah, thanks. Excited to have Matt on as a guest speaker here. Chris Throne, I lead our target vertical here at Digits. Also former Target on the loyalty marketing team, working with a lot of our brand partners here today on all things Target Circle, promotions, Roundel, Target Digital, what have you. And favorite summertime activity here locally, Dave, you already guessed mine before the call, and I'll have to double down on Matt's as golf. But I'll add one as well. We moved to Stillwater, a suburb of Minneapolis here for folks that aren't local, and it's a very hilly downtown area. So we bought e-bikes a few years ago, and really enjoy kind of just hauling the kids around on those and enjoying the summer that way.
Awesome. Awesome. I have to share mine would be boating. So very, very typical standard Minnesota answers here. Golf, cabins, and boating.
There we
So
go.
that is good. Well, let's turn to the topic of the day. So we are here to chat Target earnings and sort of, I would say, just overall general state of Target. So that on the slide here is just Target, what they announced from an earnings, a negative 3.8 comp, worse in stores, better in digital. I mean, what are your guys' first impressions? Are these results you expected, or were these different, hearing Target and kind of where they were at? So Matt, I'll turn it to you first.
This I think it's a little worse than what we had expected. From our perspective here at Genesis. I mean, -4, that's pretty big. um, and it's driven by stores. I guess maybe it's not a surprise when you're out in stores and you see the state of some of the stores and the lack of inventory and how the struggles are with just getting products on shelves. But I did not expect it to come in this low.
I don't know. Chris, what about you?
Disappointing, yes. Surprising, I would say not terribly. As you shared earlier, Dave, we represent about 6 billion of targets, 100 billion plus in POS dollars. So this is kind of something that we had been tracking heading into earnings, and we're seeing similar-ish numbers. And yeah, I mean, it's kind of been the trend for the past 6 months or so. So disappointing for sure, but not terribly surprising that that was the reality that they reported.
Yeah. Well, I know for us, we knew it wouldn't be great, whether it was a -4 or -3 or 2.5, or, it's hard to tell, from outside data how exactly close it's going to be, but we knew it'd be down. Right. And so general themes were similar. This is just a word cloud of their transcript of like what they said, right? I always find it interesting to say what words did they choose to use, right? So tariffs, challenges, environment, shipped, all those were the themes sort of the actual earnings call. I know, Matt, you talked about state of stores. I think that probably didn't come up as much as maybe some of us in the CPG side would have liked it to, right?
Yeah.
How are they stocking shelves and the inventory side? They can consider that more retail fundamentals, I believe is how they talked about it. But I think anybody close to the Target world knows that stuff needs to get better to try to get that store experience better. One of the other things that we talked about when the three of us did a prep is really just comparing it to Walmart. And so, these are some of the charts, if you Google around, of just like Target business versus Walmart over the last number of years. That the top is just their trailing revenue and the growth. And you can see Walmart on the bottom right has just been so much more consistent as far as growth month over month or quarter over quarter, where Target's been a little bit more of a roller coaster. I think if you rewind the clock to COVID, they were the big winners. And I think, largely they just have had a hard time recovering or kind of stabilizing is maybe a way to say it after that. But for me, for our clients, I overlaid Target business versus Walmart business kind of on those same charts. And you can just see with COVID, they just had this huge spike. Usually Walmart and Target will move pretty similarly together, top down, but during COVID, Target really won. And part of me feels like a lot of their challenges today is just recovering from that huge sales spike and sort of like normalizing their business after that.
Yeah, if you go back one slide, I think that the bottom chart, like just so people understand how big of a win Target had, the bar chart on the bottom, the green one, green and red, the year-over-year quarterly growth, those bars for Target in the COVID time periods, that's 20% comps, right? Walmart never gets really above. Well, they never get out of single-digit comps. They're still growing. They're consistent. Target had 20% comps for 1, 2, 3, 4 quarters, and went from 80 some billion to 110 billion almost overnight. Like in 1 year, they jumped $20 billion.
It's hard to lap. Yeah.
It's hard to lap. And it's hard to also be like, well, okay, what do we do now? Like it's $20 billion of new sales that is going to come into a system that maybe wasn't quite ready for it. And, like they got to deal with it now operationally to make sure that they can sustain it.
That, and I think there's a natural inclination for complacency to, set in. You're like, shoot, we're pretty good at this, right? Like, 20% comms, this is easy. So I think that may have been a little bit of a factor as well.
Yeah. And I think that, I mean, I'd say those big comps, this chart, like that part of it, I think I probably didn't recognize as much until this earnings call. I'm really starting to look at it this way a bit of, they've Walmart's kind of won back all of that business, if you will. They've sort of normalized, at least from a trend, that 20 comps they didn't have during COVID. It's taken them 3 or 4 years to kind of catch that back up, and now kind of caught back with Target. So part of me thinks like the worlds are now aligned again, right? The people that shopped Target during COVID have found their way back to Walmart potentially. Where do we go from here is sort of the way I think of it, right? Like, has Target taken 3 years to catch up? And maybe now, hopefully, they can figure some things out and it's just a little bit more status quo going forward. It's a harder viewpoint to look at because I think we all get so caught up in quarter to quarter and what people aren't doing right.
Yep.
But tops down, I look at it, it's more understandable, I guess, once I kind of looked at it this way. So, all right, we're shifting gears. So we've got the way we want to handle this next half hour or so is we've got a couple of questions. So I call this sort of podcast style. I'll bring up some questions, turn it to you guys and talk about it. And then we'll open up for full Q&A sort of at the end. So for those on the call, if you want to put a Q in, you can put it in anytime. We'll answer it live if it makes sense. Otherwise, we'll kind of hold them to the end if they're a little unique. But I'll kind of open it up first. And I'll have, we went to Matt first this last time, so I'll go to Chris this time. Chris, what is something Target is doing right? And you kind of would want to call out as potentially a win that can carry forward.
Yeah, well, we kind of highlighted it a little bit earlier when you shared kind of the top level results, but one thing I'd highlight here is digital. Certainly that was the biggest bright spot that I think you could take out of the Q1 earnings. We shared earlier, Target posted what was it, a 4.7 positive comp in digital. Our clients actually fared a little bit better than that. They were a +7. So they certainly have some nice momentum with Circle 360. They've done well with acquisition there. Drive up orders, have become a staple for a lot of weekly grocery and essentials trips. They have a great app that they've built around these growing digital fulfillment services. So I think set up very nicely there. I will say, like, having said that, I do think they need to figure out in digital how to recapture like discovery and impulse purchases when you're replacing those kind of wandering like, oops, I just spent $100 on an in-store trip at Target with drive up and same day delivery that aren't, set up the same way. So really good example, like just this week, our family completed a grocery, mostly grocery and essentials drive up order that we built typically over, several days during our shopping trip that week. And not once in that process did I see, Target trying to drive me into like apparel or hard line. So I think there's some low-hanging fruit and work to do there to continue that momentum in digital, but how do they achieve some crossover into the apparel and hardlines business?
Matt, what about you? What's one or two things that are working, either building on Chris or your own?
Yeah, I will try not to give the canned answers that people have already heard and try to find, what's a new nugget here that maybe is an insight for the folks listening. I think you mentioned one thing, guys, that in 2020, back when COVID and comps went nuts, complacency set in, and that's not a guess. Like, that's true. I was there. I lived through this. And then once I left Target, I was calling on Target directly. And you would talk to buyers and they just did not care. They didn't need to do anything and they would hit a 20% comp. That makes you very lazy and complacent and not want to drive innovation. And I can tell you right now, Target's teams, everyone we're talking to is laser focused on innovation. So what are they doing right? I think they recognize, holy crap, we got way behind in what we needed to bring in. And they are really rethinking, what do we do in stores with innovation to make this really fun again to shop at Target? So the Hardlines team has a huge focus on this. And you're starting to see it a lot in food. I think one of the other things that they're doing really right now is that Target does great with major influencer partnerships. So if you walk the floor pad, you've probably seen some major food launches that I think Target did a great job with. Biro was a huge launch last fall. The non-alcoholic beer. Cloud popcorn just launched with Kourtney Kardashian. Like Target's still first on most people's lists of where they want to go to launch cool new things. And if Target can keep the momentum going on that and keep driving the cool new influencer brands, I think it's really going to help get more people into stores and start to pick up these comps.
Yeah, I think that makes so much sense. The idea of and complacency is a word is hard. It's just you're all if you're trying to fulfill 20% comps, it's just what you're focused on. You don't want to change planograms. You don't want to do that. You just want to you just need to keep shelves full as best as possible. Right. And so now I think it's fair to say what their the goals have changed. Right.
Yep.
I remember shoot a podcast I listened to Ian and Chris on the Omni Talk, the former Target folk that people probably it's stuck in my brain now that Walmart's winning. Like 2, 3 years ago, there were like all these Walmart stuff they were excited about that they were doing, and now they've probably come to fruition. And Walmart's winning now. My hope / assumption is like there's all this cool stuff Target's been working on the last year or two that aren't really light of day yet, right? But will be coming out, new assortments, new tactics, whatnot, that are really going to help drive the biggest upswing for them coming in the next days. So with that next question, we talked about the positives. So now is maybe one thing that can be fixed. So what's one thing that Target maybe isn't doing well today that I'd say you think they can fix either this fall or in the next 18 months, so next year. So it's not just a esoteric problem, but something a little more tactical that you think they can get better at. Matt, I'll go to you. We'll kind of go back and forth.
Do you want me to just say in stocks?
I was a former business analyst, so in stocks is near and dear to 22-year-old Dave's heart. So yes.
I mean, yes, in stocks is by far my number one thing, but I will, again, I'll give you something that's maybe not as talked about. Do you guys know how expensive it is to do business with Target as a vendor?
We are told it's a lot.
Broadly, yes.
So like this is like, without saying who or what or categories or any of that stuff, we've got a vendor here that calls on every major retailer across the chain. And they told us it is 6.7 times more expensive to do business with Target than it is to do business with Walmart.
Jeez.
Right? Like wow. That is enormous. And as a vendor, who do you want to serve? You want to serve whoever's going to buy the most of your product and give you the best return on your product. And if you are that much more expensive, which this is not one vendor, like Target is expensive to do business with unless you are a really big JBP partner. And I think they've really got to relook at how many accruals do they have and how many different costs and how many different things are they truly asking vendors to do to work with them? How many, deductions and late ship fees and everything else behind the scenes that the vendors hate. I think Target's got to really clean that up.
Yeah. And I think it is dollars, but I also think it's process, right? And so cost in time and in resources and how difficult they make things, right? Like in our world, in the digital side, you used to be able to just submit a circle offer and it was live 98% of the time, like 2 weeks later. Yeah. Now you have to go through a paperwork process, or it's many weeks longer. There's different systems. Like it's just harder to do business with than they used to be. And that doesn't always cost you money, but it costs you time and effort and brain power and what. And so I think across the board, how do they make themselves the easiest and cheapest retailer to work with is a vision that I hope they take on. Chris, what about you?
Yeah, so like I'm a little bit more digitally focused, obviously. Kind of anticipated Matt was gonna hit on the inventory piece, but I do want to double down on there just briefly of just like if the digital guy is, recognizing that that's Target's number one problem as well. Like, I think it's something to pay attention to. But outside of that, I think this one's a little bit under discussed outside of our little, Target vendor community bubble. But I do think they need to fix Circle that they relaunched about a year ago here. Target changing circle deals from tap to add to auto apply, we have seen has had a major impact on, circle performance and the deals that are running there. And main reason for that we've kind of discussed with our clients in Target is, these deals are auto applying now. Guests are getting these deals that they may not even be aware that they're getting. So, vendors are spending about 2.5 times more to run the same circle deal that they ran a year ago, but they're not, really driving any more incremental purchase behavior than they used to. So, it's not to say you can't drive sales with Circle anymore. I mean, credit to our team and our clients for pivoting their Circle strategies to things like BOGOs and segmented offers. But the reality is you can't really run, the same mass percent off Circle deals anymore and expect the same results. Target on their side has really leaned on, this is what our guests want. They want it to be easy. They want it to be frictionless as kind of their main rationale. But I don't think that's universal. I do think there is a large contingent of guests that, are their best Circle users that like hunting for their own deals and building their shopping lists that way. So I do think Target needs to kind of readdress, some of those decisions from last year and in particular, find a path back to tap to add Circle deals to just make it a more viable promotional channel for vendors and, increase the value where vendors will be able to, offer more compelling deals to guests again.
Chris, it's interesting that you said I didn't even realize that they made that change, but now hearing you talk about it, we might be like number 5 all time Circle. Like my wife is in Circle all the time. I swear we probably spent $1 million through Circle. I used to go in, I'm not even the Circle guy, and I would add deals because it was really fun. I don't even know the last time I went in.
You missed that engagement.
Yeah,
element.
it was an enjoyable thing. Like, oh, what can I save money on now? I get like you want to make sure that you're gonna get the deals to everybody and help them, but like I don't even know what's in Circle anymore. And we use it almost every day.
And yeah, I don't think they can completely put the toothpaste back in the tube there, but can they find a happy medium between maybe some of the deals auto apply, but getting back to that's similar to what I said on the digital comment, like getting back to that sense of discovery and finding good deals in the app.
Yeah, we had a couple of questions come in. One, just sort of a comment, probably more around the expensivity at Target and some agreeing. So some details there. And so agreed there. One, a little bit more about systems and out of stocks. And I'd say, Matt, that's not something that I'd say Digits is as familiar with new systems. Is that something you're familiar with?
The systems don't necessarily drive the out of stocks. It's the inputs that the IAs are putting into the systems in the first place, right? Like if Target's really focused on inventory controls, and so they're just not going to order nearly as much. Like that's part of what's causing it. But I will say the comment said new systems are driving issues. You mentioned Circle offers, Dave, and putting them into the system. We tried, it was a Q1 Circle submissions. We're supposed to go into this new, I don't even remember what it's called, offer submission portal. Yeah, vendor, right. And they shut it down after 2 weeks because it was broken and didn't work. And we had to go back to uploading an Excel grid. It's like those little things add up and make it so complicated to execute the strategy how you have to.
Yeah, they've been, ever since they got rid of OMT a few years ago, they've been kind of going through different cycles of new systems there. And I'm not really sure why they haven't quite figured it out yet.
Like we still have people that complain about Greenfield. It's like it's been 5 years, 6 years, guys. Like it's okay, but yeah, it's the systems are horrible. They are, but every company has horrible systems when you're this big because they're all Band-Aid fixes on Band-Aid fixes. It's the top of the leadership gets to say what matters most, and if they say we want more inventory in the stores, guess what's going to happen? They're going to get more inventory.
Yeah, especially in the right categories. I mean, I think, where they have struggled specifically, I think, is managing store level inventory also against digital orders. And I think that's a dynamic that obviously went from 2% to 20% in COVID. And I imagine that that's difficult just as an inventory team, being able to be available physically and being able to be available digitally. Obviously, just more product on the shelf helps solve that problem. But I just think from an algorithm
Yeah.
point of view, it's probably quite a bit different than it was in 2004 when I was a video games BA. So it's a
Yeah.
little different.
Well,
Yeah,
that's a $20 billion growth that we mentioned, and this is a prime example of how they've got to really rethink the systems that are running this. How do they make sure that they're able to still maintain that $20 billion growth, but
Yeah.
also it screws other things up. They got to fix it.
Another question came in, and this is probably more specific to we're talking about in-store growth right now. Any things in your guys' brain or idea of how they're going to do it this summer? So what things they could do this summer to drive physical business? I'd say we already mentioned in stocks, right? Anything else on a physical business side?
I would harken back to what Matt said earlier and just assortment innovation. I think that that is what is going to drive trips and some of the influencer partnerships. What is that hot new partnership that is going to drive a physical trip to a store?
Got it. Okay, let's shift gears a little bit. So most of the brands that are on this call, I'm sure, want to drive business, even if Target's down, right? Let's say Target's down, they were down 3-4%, right? It's still a huge business. It's still $100 billion a year, right? Vendors that are significant, some of them are growing, some of them might be losing a little bit, but the business is still pretty big. So fast forwarding to the next couple of years, because I think we all believe in the Target brand. We believe in the leadership. They'll get things figured out. And so it'll continue to be cyclical. So how do brands win? Specifically, I'd say in the next 18 months. If you're looking at this fall slash 2026 transitions and planograms, what tactics, something that these people on the call can take away to their teams to implement that actually helps them win share in the next 18 months. So, Matt, I'm going to go to you first.
I think if we're talking the next 18 months, um, going back to sort of this complacency thing, like Target needs innovation and they really need brands that want to win with Target. And I know it's difficult. And I know we already went through some of the things that are broken, but at the end of the day, it's 1,800 plus stores that can be really, really good when they get behind something. So we are pushing our vendors really hard right now to bring innovation, bring new ideas, have an honest conversation with the buyers. What are you looking for that we can help you with? I can't even tell you how many vendors just throw whatever at the wall and hope that something sticks. I used to always have a mantra as an old buyer: if you could show me why what you're showing me is going to be better than what's on shelf, you make my job easy. I want to work with you. And I think we got to get back to that, make the buyers' jobs easy with some really wonderful innovation. And I think that the one thing in 2025 with the social world we're in, brands, you've got to help drive traffic. It's not just about Target anymore because I mentioned the influencer partnerships and the big brands that have been launching. They're winning at Target because they got a big following that they can drive into stores. And so I think every brand really needs to be looking at e-com and social and figuring out how can I get my voice loud online and get it into stores. And that helps everywhere, but it really, really works at Target.
Yeah, you're speaking our language there, Matt, obviously being retail media. But I think we have vendors that are coming to us that maybe get referred to us through a friend or whatnot that are launching at Target. And I share this as like a sad story, or maybe a scare story, is because they'll ask us, well, what can you do to help? And we'll kind of talk about that. We can run media, we can do social media, we can do, paid search, whichever, right, to try to drive their business. And I would say at least half the time, the founders or the folks will have is like, oh, we don't budget for that. We didn't
Yeah.
put money in our budget for that. We're giving Target all of our money, and now that we're at Target, we just think we're going to sell. And I would say most times that is not the case. Just because you're on a shelf at Target and buried on page 4 of search results does not mean that Target guest is going to find you. And
Bingo.
so you are just as responsible for driving traffic to Target's website almost as you are to your own, because I think the days of sort of just showing up on shelf and having like a brightly colored package, like, and not telling anybody about it, like they're not going to just find you on the bottom shelf within that space. So a lot of vet brands come in and then are out by the next POG transition, or they'll call us 2 months later and be like, you know what, Digits, you guys were right. I do have some money. I want to do paid search. And we're like,
Yeah.
sure, but you're already 8 weeks.
Yeah.
What do you think, Chris? What piece of advice for brands?
Yeah, I have three, and they're all kind of a little bit interrelated here. And you touched on one of them, and I think number one is focus on winning share at Target. And I think a big part of that is getting buy-in from your organization on that being the main KPI that you're driving towards moving forward. I think the reality of 2025 is the rest of the year is going to be difficult. Comps are going to be tough unless you have some big year-over-year assortment gains that are already putting wind in your sales. It's going to be tough to drive a positive comp. So, focus on winning share, and I would say more so, setting yourself up for 2026 line reviews and assortment wins there. Kind of along with that, you certainly can't go dark in the interim or wait it out. I think that is going to be, the natural inclination for a lot of brands. Target's business was not strong in Q1. They're not, projecting a ton of confidence through the rest of the year. Okay, I'm going to pull my, Target investment back. Where your competitive set is going to do that, there is opportunity for you at Target to, win while they are sitting on the sidelines. And then, connected to that as well as, lean into the partnership back to Target, and with your buyer. It's times like these that I think we have seen Target be more receptive to vendor-led partnership ideas, especially if it comes with funding. You need to make sure you still have that strong, like, what's in it for Target angle. I think that's one of the biggest misses that a lot of brands make, that they are too kind of focused on what do I get out of it. Um, Having said all that, I do think it's probably going to take maybe another quarter-ish of, some near-term pain, I think, before Target really comes around and realizes vendors aren't going to, blindly fund all of these Target-led initiatives. But I do think by Q4 there is going to be that realization and a lot more openness to vendor-led partnership ideas with your buyer and with Target.
Well, I think that leads me to probably my next question, and then I'll answer it first because that's what was in my head is sort of what are we going to see out of this acceleration office, right? So that was a big piece of the earnings call was, Michael Fidelki, who sort of was the CFO and then he has moved into ops and I think is, one of the people vying to potentially be the next CEO is sort of leading this acceleration office. So I have already thrown my hat in the ring of please call me. Digits would love to be on this acceleration office board from all of our years at Target, and I was on a previous Target transformation office at one point in time, and so some experience there. I'll gladly serve on this board.
Fidelki, if you're
Um,
listening, yes, DMs are open.
yeah, we'll clip this one and put it on LinkedIn in case it gets out there. Um, but I mean, I think one of the things it goes back to, I hope they will listen to vendors. I hope they will accept vendor input of like what slows Target down, right? So Matt, your comments, I think around fees and difficult to work with, like that slows the whole machine down, right? If somebody then if they want to launch something, it just takes longer because they're more expensive and they're harder to work with. So what what in your guys' world do you think might come out of this acceleration office, or what wish list item, either something you already said or something new? Do you think you'd want to kind of come out of this Target acceleration office work?
Who's going first? Me?
Yeah,
You
you,
got
you
one?
take
Go
this
for
one
it.
first.
Well, it was just a quarter or two ago that Michael was talking about this. What do they call it in digital availability or on shelf availability metric? Right, like that. Getting back to what Chris was mentioning about
Purchasability. Yeah, I think it's the
purchasability,
term. Yep, yep.
right? It's making sure that they're prioritizing in store instead of digital. It's that mix of the two. Like Michael was just talking about this not too long ago. That whatever this office of acceleration thing is, like that's got like those metrics like that, where it's getting back to like I'm just an average person walking the stores. Am I getting what I need? Like that's got to be front and center. Were any of you guys around when AIM was the thing there? The department. I mean, it was another one of these strategic initiative departments, divisions that was set up to go in and troubleshoot all the problems and figure out solutions. Like this is just the next version of it. And most of our projects with AIM when I was there was about on shelf availability, inventory, having the right planograms. Like it's the same blocking and tackling that they, as boring as it is, they just have to get better at it.
It is boring in concept, and some of the kind of themes that we talked about before, though, I think like underscore the need for it. If Target's going to run lean on inventory, which I think is an admirable goal, it certainly like it reduces the margin for error in being in stock too, right? So I think there's, if they can double down on efforts to figure that out, I think that would be a win for them.
Yeah.
What
Um,
so
Go
last
ahead.
question, and then for the audience, we're getting close to Q&A. I see some questions popping in. Thank you. If you have questions you want us to answer, I'd say go ahead and put them in now because we've got a few minutes left. And then we'll kind of get to more open questions if there is some. So, all right. The fun part of this is predictions. While normally a New Year's type thing, it's always just fun to try to predict what happens, and nobody gets held accountable to these things. So if we're having this webinar in a year, what's the theme? A year's not too far out, right? But if we're looking at next year, what's one theme that you think we would take away in this spot? I'll go to Chris first.
Touch on this one a little bit. I do think there will be, probably one more quarter of pain. I think the turnaround is coming, but it's not immediate. I think Target's immediate inclination in times like these are they often take I would say we alone can fix it type of approach, and I think they will realize that they need, stronger vendor partnerships, by the time we get closer to Q4. So that's one. Two, I know there's been a lot of speculation about, the future of Cornell in the lead chair. I do think he will step down probably sometime around fall. He would make we've highlighted a convenient scapegoat, if you will, for some of the challenges that Target has been facing there. And then, we'll see who replaces him. It certainly looks like, Fidelki might be leader in the clubhouse, but wouldn't rule out, Rick Gomez or even someone external there. And then three, I think is maybe a little bit more of a surprise, but I do think Target will figure out and recover from its recent change in positioning on DEI. I do think it's still relatively fresh and hasn't been really replaced in any meaningful way in the news cycle. We've kind of talked, internally that we believe Target still stands for, a lot of these initiatives, even though they're kind of like talking about them differently. So I think it'll take a little bit more time, but I do think they will figure out how to kind of package and, message that more effectively within the next, 12, 18 months here.
Yeah, they need to find their voice in that space, right? Because I think anytime they've spoken up about anything, they've just gotten
It's
themselves in
not,
trouble.
yes, it's yes.
So they need to who was that TV show Scandal? They need to find that lady from Scandal to help
Yes,
them
hire her. Yes.
that can help them find the right way to package this up. Because I do agree. I don't think any retailers are going to steal that brand from Target, right? But we talked about influencers and celebrities and whatnot. That's very crucial to Target's success. So if they can't figure this out, that's if they risk losing that brand and cachet a bit. And so I think that they will. I hope that they will, sort of in that space.
I don't think there's any question that they figured out. Like, I've always said Target is a roller coaster of 6 to 8 years. They're wonderful, and then they're not so wonderful. This roller coaster happened to have gone up a little longer than 8 years, and so they're in a tough spot. But they figured out they have really smart people. Like we've all been there. How fun was it your first day of orientation, walking in to TPN and seeing the
Oh
Great
man.
Hall? Like, right? Is there anything like it?
I don't
Yeah,
think so.
certainly brings you back.
Like there is a mojo about that company when they're doing well. And I think is again, we talk about basics and fundamentals. Get your people back in the office. And it doesn't have to be 5 days a week, but get them back to get that culture going again. When you walk into the Great Hall, it should be exciting and fun and optimistic. And that brings creativity and new ideas. And all of a sudden, the merchants get buzzed and get excited again. And they're making all sorts of cool things happen. Um, you guys threw some of the buzzwords out with DEI and some of the other stuff. It's like Target stands for so many great things. They're just not even talking about it right now. They're letting other people write the script for them. And they've never done that before. Get back to writing your script. You guys have always stood for DEI. How in the world did it flip in 3 months that you don't stand for it? You do stand for it. You stand for it more than almost any company in this entire country, right? Like, don't let other people write the script for you and screw it up. Get back in control and talk about all the wonderful things about you. And I'm super critical of Target. So I'm not sitting here going, wow, they're the greatest ever. Like, I'll rip them as much as anybody else. Like, but they're all good company at the end of the day that can make stuff happen. Just get back to doing what makes you special and get rid of all the rest. Is that too boring? Like,
I think that's agreed. I mean, I think that's agreed.
I think boring is good. Yes.
Within my community of, at this point, mostly, Target adjacent folks that all used to work there, because I worked there 14 years. A lot of my friends worked there for similar amounts, right? But we've found other places now. I think the way you described it is the way a lot of us think about it. Is we still believe in the brand. We still want the brand to do really, really well. And we want them to take credit for some of the positive things they do. So, but I think, yeah, they've basically been quiet for a while now. Because again, like I said, they learned they couldn't say anything right, sadly. And thank you to the chat, Olivia Pope. Correct. I believe that is familiar, the scandal lady. So she was great. She would have fixed this thing 6 months ago. So okay, let's transition to Q&A, because I think we are at time, but we have time to answer probably open questions, and then we'll sort of wrap up. So I think there's one more Matt, one more Chris. So I'll do the Matt one first. So how do you make innovation bigger with Target? They're getting special purchases, but limited weeks, and you can sort of see. So, any tips to secure more resources to make innovation better?
Oh boy. I mean, maybe shoot me a note after, we can talk specifics in your case. I think I go back to what I said, 15 minutes ago. Our job as now on the buyers or the broker side and on the vendor side is to make the buyers' lives easy. So, I mean, step one, figure out what are they even looking for in the first place, and how do you innovate into that? If you're talking side caps and end caps and out of office displays and all that sort of stuff, it's maybe a longer conversation that we can sit down and have, but it's seasonally, culturally relevant moments that you can support with products that Target wants to have out there.
Awesome. I'm also throwing up, this is the thank you for joining, just because we are at time. We'll keep going for a little bit, but if anybody you are leaving, these are our emails and contact info. Matt, Dave, and Chris, and obviously you can find us on LinkedIn as well too, if you just shoot us a message there if needed. So Chris, the one question for you was, what they removed the 10% circle fee, but then at least this person is having a harder time having say in her Target initiated circle offers. Any feedback or thoughts or advice there?
Yeah, I mean that one certainly hits close to home. Our clients are very aware. We were pretty involved in those discussions, back with Target and getting that removed, which was a positive. We did see that trend that was highlighted as Target may have capitalized on that a little bit. And well, if you're not paying the fees, we're going to be driving more of the Target initiated circle offers. So that has been a trend. I do think, we have seen vendors start to push back on the amount of Target initiated promotions and expectations for funding there. So I do think that will continue, TBD on what the outcome is going to be. But as a vendor, I would say, voice those concerns. And we'll see what happens across the vendor community here. But it has been a big shift. Majority of our clients, I would say, are paying, 70 to 80% of the total markdowns that they are spending are with Target initiated promotions. And that's up from, maybe 50/50 a couple of years ago. So big CPGs are starting to voice some concerns there, and it all comes down to what you negotiate with your comprehensive demarkdown funding agreements.
Last question, and I put it up on the screen because I had a person email it in ahead of time, and this is very you, Matt. So right, they're a local Minneapolis resident. They're like, why doesn't Target do more in grocery? So what would your thought be there?
Oh boy. I mean,
you could probably have your own webinar for hours.
Yeah. I think here's how I encourage everyone to think about grocery. I mean, there's 200-ish super Targets. They're grocery stores. They're great. but the vast majority of the chain is not. But Target understands that. And so in the vast majority of chain, they're not grocery, but they are certain categories. So in lunchbox, snacks that you're going to put in your kid's lunchbox, Target over index is like 3x what they do market share for food and beverage. And so the categories where they really, really, really win in food and beverage are huge winners. And so playing like you can't force Target to be food and bev and fresh produce. They're just not. They're not set up for it. They're not going to be able to. They're going to have a couple items here and there. But those categories where they really strongly over index are the ones where if I'm a vendor and I want to win at Target, I'm figuring out how I play in those spaces. They can't build more supers. They're just not going to do it.
Yeah, it's sort of who they are, right? There's so much capital investment on
Yeah,
basically
and that's
turning
okay.
themselves
It's
into.
okay. Yeah.
If they took what are their floor pad today, what percentage grocery? If all of a sudden they tried to double that, like that's a capital investment. That's just not their brand. But
Right. And we've already talked about how much it stressed their system with where they are now. Imagine if they tried to be fresh grocery everywhere in a much bigger way.
yeah, it'd be
It's just not who they are, and it's okay. They are a fill-in trip for food and bev in most cases, and they sort that way. So support them. Make sure that your products fit that buying occasion.
Well, thank you everybody for coming. This was a great discussion, great questions. Appreciate the sort of live audience. Wrap up. We will send out a thank you and a recording. Excuse me. Way to end it here on the big sneeze. So thanks everybody for coming, and we'll see you next time.